Let's go to the state budgets now, because we focus a lot on this program and others, of course, about the federal budget, but we have the second tier of government and most of their budgets are in around the country, and it's a similar story of heavy debt and deficit in most of the states. Although we've got to say, given the recovery in this country over the past 6 months, a lot of it is looking better than it might otherwise expected to have been. Let's catch up with Deloitte partner Chris Richardson, who joins us from Canberra. Thanks for joining us, Chris. We had the New South Wales budget today, South Australia here in Adelaide as well. More debt and deficit, but in both cases less than they expected a year ago, and they are pointing to a path to surplus. Should we be pleased with where the state economies and state budgets are heading?
We certainly should. Economies first. That news remains magnificent, and it remains magnificent pretty much across the nation. But a couple of things in particular are helping state budgets. There's a commodity price boom, things like iron ore prices, marvellous for Western Australia. In fact, even coal prices taking off of late. That will be good down the track for the Queensland budget. And perhaps the New South Wales budget today as well. They're putting in a bit extra there. So commodities are helping. Even better still, over on the East Coast, those house prices are really helping budgets. You saw that in spades today in the New South Wales budget. And all of them are benefiting from the job recovery through their payroll taxes.
Yeah, Chris, we'll just go through some of the stats now. We'll put them up on graphics, the state budget deficits that we've had revealed so far this year. You can see that New South Wales announcing today an $8.6 billion deficit, with Victoria $11 billion, Queensland $3.5, South Australia today just under $2 billion. Now, the other two states have got their budgets yet to come, but the latest figures have them nearly $1 billion in Tasmania and $5.5 billion in Western Australia. So you've got a total of state budget deficits at $25 billion thereabouts over this financial year, extrapolating those other states from last financial year. And of course, this comes on top of the federal government deficit for the coming year of $106 billion. So there's a lot of debt being racked up there, Chris. But one thing I've noticed about the state government budgets is while they're still trying to stimulate the economy, unlike the federal government, they don't have to shovel that out in social welfare and permanent spending. It's not stimulus that's going to be locked in forever. Most of it is in actually infrastructure projects, which of course is not permanent, but is then going to pay, hopefully, an economic dividend down the track.
Yeah, and we need those infrastructure projects to help push along the recovery, and now's a great time for it because interest rates are very low, so the states will be able to borrow that money very cheaply. In fact, the only problem with infrastructure from the states is that it hasn't arrived quite as fast as you'd like. That's not unusual. You can't turn around the infrastructure spend on a dime, so there have been delays on a bunch of projects across a bunch of states. As you say, though, you know, for all these things that are happening at the moment, it's actually interesting that you're starting to see states increasingly pointing to getting back in the black. New South Wales today, for example, seeing that in 2024-25, so basically 3-4 years away from now. And that's the sort of thing you want to see. I don't mind the spending at the moment and the assistance that gives to the recovery down the track. You do want to see healthier budgets.
Now, we've spoken often about debt, and you're less anxious about it than a lot of observers. Nonetheless, given both states and federally, we're going to top out debt. It's still an enormous amount. If we go back 10 years ago and look at where our government debt, both state and federal, is going to end up, it's eye-watering numbers, but not as bad as it was looking a year ago. So presumably you'd be even more relaxed given where it looks like topping out.
Yeah, and in fact, we concentrate not so much on the debt, but the cost of debt. And to take the federal government as an example, the striking thing is that the cost of debt federally is going down rather than up. It peaked in 2018-19. It's peaked ahead of COVID because although the fight against COVID, both from the feds and the states, has been really expensive, the big fall in interest rates means we locked away the borrowings, the big spend when we needed it, at incredibly cheap rates. That's pretty good news.
What are the catches here, Chris? If obviously this is all better than we expected a year ago, 6 months ago. The infrastructure is good as long as it's a sensible infrastructure. But what are the catches here, especially for the states? Could they get addicted to these levels of spending?
And there is a risk. Again, I don't mind the spending right now, but down the track, you want healthier budgets. Australia, federally and at the state level, was able to fight off this crisis much better because our budgets were much healthier than you saw in the rest of the world going into this. By the by, because we've done so well against COVID, believe it or not, the cost of our fight against COVID has been a lot less than in many other places around the world. And we entered this with relatively lower public debt than seen in most other rich nations around the world. We exit it down the track with an improvement in that relativity because others have had to spend more to fight off COVID because they messed up their COVID response.
Good news. Thanks again for joining us, Chris. I appreciate it.
Thanks, Chris.
Chris Richardson there, all over it as usual. It's an astonishing situation, isn't it? We all ought to be very happy about the way this is working out economically for the country, yet we are now in a year when our state and federal governments will combined spend $130 billion or more additional to that which they receive. Combined deficits of $130 billion plus in 1 year. Just eye-watering, but still, strangely enough, better than many expected a year ago.